I am making this video based on a high volume of requests, and my request is that if you are not considering or willing to consider mathematical probabilities and numbers, then I would please ask you to leave this video because it is going to be a little bloody. But I would really like for everyone to know that I am bullish GTII and CRTD before I get started with this video. What is up, you guys? Thank you so much for stopping by once again. This is Arca coming at you with a CRTD, technicals, raw price action, and statistical threat of analysis on this Sunday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called Arca Bulls. With that said, let's dive right into the charts. Okay, so we are looking at CRTD on a daily chart here, and we are going to go over a few things first. In order for us to understand where we're going to go or where we could possibly be, we need to understand where we have been. Okay, so in this case, I would like to just go ahead and recap from where we last left off. Okay, so this is a broadening descending wedge on the daily. We have respected the golden rule of three. Pardon me. We have respected the golden rule of three pretty nicely here. So we have a test 1, 2, 3, reclaim the inside, test this resistance as a support. We capitulated per the expectations of test number 3, of course. We then reaccumulated and then pumped to the upside. Okay, now the touch of the upside was very particular here because the overall take profit for a broadening descending wedge is located at the genesis of the formation, of which you see almost perfection on that touch of the resistance, right? So in coming down and rejecting from this top, which would honestly be expected almost every single time. I mean, GTII, CEOS, MMAT, so many tickers have this formation, right? Specifically on the 8-hour and the daily as well. So upon making the retracement and the rejection from the top take profit from this broadening descending wedge, we actually formed the bear flag, and a pretty large one at that. So usually ascending triangles after a huge downtrend like this signal a continuation to the downside. Now, it is a bit I want to say that it is expected to come all the way back down as well. And it's only per the playbook rules. I'm not talking about synthetics. I'm not talking about the illegal shorting or any of that stuff, because the fact that we know that it exists and it's present. We have to kind of understand the play in other ways as well. Remember, I'm bullish CRTD and also GTII. Okay, I'm explaining here just the trading rules. Okay, I'm just the basic trade, the chart. A lot of people do not believe in charting with assets like this because to be very honest with you, it's quite difficult. It's an entire challenge, and it's actually very difficult for me to practice these types of back tests and stuff on assets like this, because trust me when I say that it's very hidden the way that the price action moves on this. Right, so opposed to like a blue chip or assets like Tesla and stuff like that, it's way easier on those. So in this case, I want to just go ahead and go over the fact that I did run a statistical backtest on this, and this was actually the time where I was heavily hated for saying what I said. Right, so this was a backtest of volatility versus momentum throughout the entire trading history of the CRTD asset on the daily time frame. And this was a specific backtest for the downside. And now this is volatility here represented by the indicator BBWP. This is momentum, and we pair it with momentum because volatility is direction neutral. Okay, so in this case, I actually did run a test every single time that we did expand into critical volatility, which could be within the 90 percentile, right? So every single time that we did move up into critical volatility, I took a metric of the, let me just go ahead and show you, of the downside pressure. I took a metric of the downside pressure versus the duration of the iteration, and however many times volatility versus momentum guessed the downside correctly versus incorrectly. Okay, so it was quite a staggering result. I mean, and I had to share it at that time because it was just too much rhyming, right? So out of a total 15 iterations, 13 were guessed correctly to the downside, averaging an accuracy of 86.866%, with an average downside pressure, of minus 48.36% over the span of about 77 days. So now we actually signaled this upon the opening of this candle here. Actually, this was on January 23rd, and the correlation and the correlation and the targets of both geometrical targets. I'm talking about the ascending triangle, which has mathematical properties, and also the geometrics of Fibonacci and the statistical backtest all matched to one target, and this is how we did it. So we went ahead and applied the minus 48.36 pressure to the downside from the opening of this candle, and it took us to the target of about, and I wrote it down here actually for, in that last video, it took us to about 4168. And we also did notice that the 3.618 was located in that target as well. So this way we were able to create now a range of support. And another thing is that the support line of the broadening descending wedge was also located in a very similar area. However, it's not quite there just yet. I'm not saying that we're going to go all the way down there, but the possibilities are absolutely present. And I would like for you to understand that this is not essentially calling a downside. This is essentially calling an opportunity, because this would more than likely bounce pretty hard from the zones where we're going to speak, and the upside is looking like it's prepping in volatility versus momentum in a great. I'm sorry, it's actually pretty insane what's happening here. So we're critically oversold. We're already starting the curvature of momentum, and we've already started to expand from a critical contraction zone. So this is indicating that there is a potential massive move to the upside coming, and and I would like to actually show you on this chart right over here. I'm sorry. Just real quick before we go, the target for the triangle, the way I was able to figure that out was actually by taking a trend line from the top of the triangle all the way down to the lowest point of the triangle, right? Just like this. And then you apply it to the breakout area, which was around this area here, that candle. And then it took us to the target right down here, right? So very similar targets. So, and the statistical backtest and everything. And this is why I said, guys, we're going to break out of this. We're going to come back up and test the resistance or the newly converted what was a support into a resistance before a continuation to the way down. Usually when we see these formations form after a downtrend, they signal a continuation of the downtrend. Okay, so now let's go ahead and just, I want to show you something here. So this was from the live stream that we were talking about, because I do get requests there and I respect it, right? So this is what I was explaining. I've already been seeing this thing play out. I'm keeping an eye on it, because if something does happen, just like the downside was called, then I'm gonna say it. I'm gonna say it out loud. So in this case, what we're noticing here is that momentum is starting to pivot. So let me get rid of my my path objectives or implied path, right? So that you can see what's happening. We didn't have that kink when we were looking at this live, and it's actually starting to happen now. And this is why I have this and this. And I also mentioned that I would be starting our implied path from the day that we were looking at it from. So you can see it's already moved gradually within the direction that we're looking for. We are looking for the 3-day exponential moving average, aka D%, to cross first over the blue line, and it looks like it's already preparing to do that, as you can see right here. So this blue, we still have a little more downside to go, which is why I made which is why I made a trend line here, because it's probably likely that we can actually make a touch of the 7th percentile of momentum before an upside continuation. Okay, so because this is happening, I haven't completed this. I must warn you, but I'm already preparing for it. I still see a downside here, but this is what I mean by preparing for it. Okay, take a look right over here. This is on the 8-hour, because we are critically oversold, and we're already making the upside continuation, meaning that as soon as volatility had exited away from the critical volatility zone within the 15 percentile, which is right about here. That's when the signal starts to kind of fire off. The next criteria or the next condition would be for momentum to then have both of the averages pitched to the upside. Without those conditions, we are not going to the upside, but I must say that we are critically oversold. And I would like to show you what I've been doing to calculate the upside. Please take a look at the beginning of my back test. So this is essentially what I have to measure I'm doing these all manually. So I'm going to go ahead and measure the amount of times that volatility versus momentum have guessed the upside. I'm going to measure the upside thrust, the duration. I'm going to measure all that good stuff so then we can create a statistical mean. Okay, we're looking at right now 65 total iterations. In knowing the probabilities with 65 iterations, that's when trades start to happen with big bucks. Okay, so this is CRTD is prepping for something nice, but I do see a continuation to the downside a little bit further. Let's go ahead and validate that. Okay, so we're looking at the 30-minute immediate short-term time frame. We're looking at a downside continuation that may be limited here due to the space between the RSI signal purple line and the 14-day simple moving average pink line. Okay, so now let's go ahead and reference the bi-hourly. The bi-hourly seems to have a little bit of a limited upside, and the reason why I can say limited upside is only, and remember this is very short term, is because we have the 14-day simple moving average right in the gravitational zone of the bull strength percentile. Okay, so that would usually serve as two forms of resistance before continuing on to the downside, similar to what's happening here, right? So we're using it as resistance and continuing on to the downside. Please mind that even the bi-hourly is already in oversold percentile. Okay, so the fact that in the oversold percentile, we're in the gravitational zone on the opposing side means that we're going to get pushed up before finding that resistance and the gravitational zone of the opposing percentile, which is the bear strength, right? And then we would face that continuation down. Please notice that the 8-hour also has a very similar upside before finding that resistance from, again, just similar to this. We're in the gravitational zone down here, push up, gravitational zone 14-day simple as resistance, come back down, just like we've been doing all along here. Okay, so now that we're in that oversold percentile, the odds are starting to shift just a little bit. Okay, so please know that the downside is very limited here, and I would not consider shorting at an overextension from this area here. In fact, this is accumulation, and this is, just like I pointed out like weeks and weeks ago, we are well within a demand zone now. Okay, so this is literally the first area of demand zone that I ever printed. This was the very less likely one that I printed as well, but I did say that this is a likely area for us to come back down and test. Okay, so let's go ahead and now continue on the analysis. Let's move on now to the 12-hour. Please notice that the 12-hour is now crossing into oversold percentile. We still have that 14-day simple suggesting some downside. We also have the 3-day suggesting some downside, but please notice the pivot between this conviction to the downside versus this conviction to the downside. You see how it's starting to weaken? This is why I'm telling you that there is a potential loss of bear strength incoming soon, right? So as soon as that happens, then we'll be able to correct to correct to the upside and flash all of the indicators in the upper term time frame to suggest a continuation to the upside, of which I should be making a back test very soon. Okay, so this is why I have all this work here, is because I am bullish CRTD, and I need you to know that. Please remember that I am not a financial, we're going to touch on some targets right now. So please remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence, and everything will be just fine. Let's go ahead and now touch on one more thing over here before we get to the targets, right? And please notice that the ARC Enhanced MACD, which is actually one of the indicators that I'm actually promoting, this is volatility versus momentum packaged in one indicator here. Okay, so what you're looking at here is momentum represented by the MACD momentum moving average, and also the volatility represented by the Bollinger Band's red cloud. Okay, so and now you can also see that the indicator features bull and bear signals. So upon the bear signal that it fired off right over here on November 22nd, it capitulated, and then it actually started printing a bull signal upon the notice of change in direction and also in trend. Please notice that it did print a bear signal here, very, very similarly to the area where I warned everyone that the downside was absolutely imminent, and we're looking at a minus 48% decline to the downside. I signaled that January 23rd, and enhanced MACD actually came about and signaled that on January 18th, and it has since continued to that downside. The reason why I can tell you is that there's still a little more downside to consider is primarily because, of course, the broadening descending wedge on the first chart that we were looking at has, it still has to, maybe be tested, right? It doesn't have to actually go all the way down here. A lot of people tend to take entry just shy of it so that whoever else wants to, or I'm sorry, a lot of short positions end up covering just shy of the actual target so that other short positions can get trapped and not take it and then just squeeze the price up, right? So this is it's kind of like how the play works. So if I'm looking at a downside continuation here, there are two possibilities, and these two possibilities are actually located right down here where I was talking about very much, for a long time, that because of this candle here is kind of the reason why we have that support line. So it's very likely that we can touch that support line at 3608 or 3097 right at the 2 fib. Okay, at the let's see, right at the 2 fib. I'm not saying that we can actually go all the way down here. I'm not even sure that there's enough liquidity to go all the way down there, but the possibility is there. I'm more favoring this area here, 3608, before finding a massive bounce from this zone here. Okay, so yeah, I think everything is looking good for CRTD. Of course, we don't want it to go to the downside. We do not want to see a continuation, of loss in our portfolios. But I am trying to present an opportunity here because this is very likely for us to find a massive bounce soon. And if I were to put a date, in fact, remember that these are just statistical probabilities. Just to give you a quick understanding, from the 23rd, from which I actually warned about this, we had an average of about 77.23 days to realize the minus 48.36% downside pressure, right? So please notice that we actually took, 24 days to realize that, and it actually surpassed my target by just a couple percent. Right, so just so you can see how I'm not a fortune teller. I actually don't have, I actually can't see exactly what's going to happen, but I have math in order for, I have math to kind of rely on to give me some probabilities. And it's not me. I'm not calling anything myself. It's the math saying it, right? So, and then I'm going to go ahead and make the statistical backtest for the upside. And I need you all to please refrain from telling me that I actually called the upside. I didn't. Okay, so it's just going to be based on what math is doing, what volatility is at, and the present stance of momentum. It's as simple as that, you guys. I'm not a fortune teller. I don't have a crystal ball. I would like for you to just know that I practice mathematical models just like the institutions do. And I would like to fight fire with fire, right? So with that said, guys, please go ahead and refer to the link in the description below if you would like to follow me on Twitter or join the Arca Bulls trading community. And you'll also notice the affiliate link, or my affiliate link, for TradingView software if you would like to go ahead and chart things out like this and share your pictures with me on Twitter and or Discord. A lot of people are already doing that, right? So, and also just go ahead and send me a DM if you are interested in acquiring the set of the Cryptex ARC series indicators, okay, you guys, including the enhanced MACD. But with that said, I wish you well a very good night and the great rest of your weekend, and I will catch you at the bell on Tuesday. Adios.